Hi, welcome back to HCB Global Academy. Today we shall continue our topics under Fundamental of Financial Markets. For this episode, we shall deal with financial regulations and central bank. Every country must implement its regulatory system to ensure controls and governance. Regulation is designed to set rules and guidelines to be followed to ensure balance among individuals, firms, and/or citizens, as the case may be. Regulation is also designed to reconcile conflicting interests. Public Utility Research Center in the University of Florida defined regulation is a process whereby the designated government authority provides oversight and establishes rules for firms in an industry. Normally, a regulatory agency is identified by law or by order to execute the regulatory framework and act as the oversight of a certain industry or particular firm. Its presence sets the boundaries to manage or control the behavior of the individuals, firms, and/or citizens. World Bank sets regulatory measures to address certain risks and social factors. These are systemic risk, consumer protection, efficiency enhancement, and social objectives. Systemic risk is the probability of a firm to fail its objective that will result in a ripple effect. Consumer protection, on the other hand, considers that policies enforced assumes the effect to the consumer's welfare. Efficiency enhancement is a factor that is considered to ensure the dynamism and agility of the policy to adopt in a fast-changing environment. In broader scope, the policy should take into consideration the alignment in the objectives of the society or factored as social objectives. The table presents what regulatory measures address the risks identified. Financial regulation is a type of regulation whereby rules and standards were set to oversee the ability of the companies to establish and maintain appropriate level of capital to sustain its operation. It also includes setting control of the market factors that will affect the financial sustainability of the firms and players in the industry. In financial markets, some players or firms failed to survive even they comply with the regulation set. The reason being is that these firms respond to the following market drivers: 1. Competitiveness. 2. Market behavior. 3. Consistency. 4. Stability. Competitiveness. Government are duty-bound to regulate competition in the environment, in this case is the financial sector. Financial sector has an important role in shaping the overall economy of a country, hence, it is a must that this must be regulated. The following aspects are regulated to preserve competition: access to capital, credit and loan-term offerings, support to providers of financing, management of business risks, transaction costs and tariffs. It must be noted that the main determinant of competition are the main forces that drive the market, i.e. buyers and sellers. Firms in the financial market must be able to understand how to respond and maximize leverage in the industry and compete. Normally, investors explore for those which can offer lesser risk with favorable returns. The question is, how favorable is favorable? The challenge is for the firm to assume a degree of risk that will enable them to compete in the market. However, connivance in the market may be and impose a high collaborative rate among market players. The government develops regulation to prevent this scenario. To illustrate, Company A, a brokerage company, imposes 1% brokerage fee to its clients. Company B, as a new player, imposes a brokerage fee of 0.75% for every transaction it closes. Company C, another player, enters the market offering brokerage fee of 0.7% for every transaction. Company A kept its price policy. In this case, assuming to provide same level of service, Company A is facing a high risk of sustainability in the future if they will not adjust to the competition. In the given scenario, the probability that their clients will shift to new players that offer a lower rate will increase. The government, in this case, may provide support to Company A to enable the company to compete should there be internal consideration or risk that they assume that can be passed other means. Note that pricing for services may be affected with the risks assumed by a firm. Market behavior. The behavior of the firms in the industry can also be regulated by the government. Their behavior in the market can be demonstrated through their 1. Integrity on their activities, and 2. Integrity representation. Regulation will come into play to address failures in the market by setting parameters to ensure that firms will comply with certain standards that will preserve integrity of the firms and level the playing field. The government normally sets full disclosure of information, prohibition on insider trading, control of new players, setting minimum capital requirement, minimum governance rules. Consistency. Consistency, same with the field of accountancy, is considered as an important principle in the business. Consistency in the market is normally demonstrated with their information disclosure and policies. The firm must make sure that they are able to provide sufficient information to their customers. That financial market is heavily a service-providing industry. Information symmetry is a plus to all customers/clients that enable the latter to make sound decisions. Information is a vital asset in financial markets. Government role is to set standards to regulate and ensure that information provided in the market are fair, consistent, and conservative. This will allow the investors to make decision. In most of the times, the degree of risks assumed are based on the information made available. The lingering issue is the company's ability to provide fair and consistent information. Trust of the clients is dictated on how the firms maintain its rapport with them through full and quality of information shared. In accounting parlance, information can be treated as an intangible asset, hence, value should be tested over time. The principle of prudential regulation applies whereby the government impose rules or standards that will govern the behavior of the financial institutions and financial markets that grant to minimize the risk of uncertainty and strengthen the integrity of the firms. Stability. Market stability is an external and fatal factor to be considered by the firms in the financial market. Given that market behavior is dependent on a lot of factors, the risk is very high. Most of the players failed to survive the ability to forecast and to mitigate the market risk. In the financial market, the impact of financial risk is something that the regulatory environment should consider. The regulation must be able to protect the interest of the clients as well as the companies to enable their corporate sustainability. Systemic instability is a challenge whereby it arises where a segment or firm was not able to meet its commitment because of their failure to address the risks of the market. At the end of the day, the risk arises is the default risk of the company to ascertain repayments, thereby disrupting the continuous flow of finances in the industry. Regulators of financial activities. Financial activities have been referred to activities that deals on funding certain transaction or expenditures. In the financial market, the financial activities are focused on the trading of securities and financial instruments. Setting rules to set standards, control and order financial activities, regardless of the source, is called as financial activity regulation. In the Philippine setting, the financial regulation is observed by the following, but not limited to the following. Bangko Sentral ng Pilipinas, BSP. The BSP is created under the new Central Bank Act or Republic Act 7063 and an attached agency of the Department of Finance. Under the Philippine law, this will act as the Central Monetary Authority, which will act as a corporate body that is responsible concerning money, banking, and credit. BSP shall provide policy directions in these areas. It is also responsible for the supervision of financial institutions and exercise regulatory powers. The function of BSP are following: liquidity management, currency issue, lender of last resort, financial supervision, management of foreign currency reserves, determination of exchange rate policy. Other activities as banker, financial advisor, and official depository of the government and its instrumentalities. BSP is governed by the Monetary Board. The Monetary Board is composed of 7 members. The board is chaired by the governor of the BSP and consists of 6 other members coming from 1 member of the cabinet designated by the President of the Republic. That cabinet member can designate an undersecretary of his department to attend on his behalf. 5 members shall be coming from the private sector. 3 members shall serve for a term of 6 months while 2 will serve for 3 months. All members can only be reappointed once. The governor acts as the chief executive officer of the BSP. In order to carry its functions, it is supported by 4 sectors/functions. 1. Financial supervision sector is responsible mainly for the supervision and regulation of banks and other financial institutions under the scope of BSP. 2. Monetary and economic sector aims to conduct the formulation of monetary policy, ensure its implementation and assess its effectiveness. 3. Currency management sector will be responsible in the production, distribution, disposal or retirement of currencies in the Philippines, including security documents, commemorative medals and medallions. Lastly, is the 4. Corporate Services Group, which is the support group of the BSP that conducts the human capital management, financial services, information technology support and other corporate resource management. More specific information is available on the organization primer of the BSP. Insurance Commission, IC. IC mandated by virtue of Executive Order No. 192/S 2015 to ensure enforcement of the provisions of the Insurance Code or Republic Act 10607, i.e. to regulate and supervise the insurance, pre-need, and health maintenance organization industry. It is governed by Department of Finance that supervises and regulates the operations of life and non-life companies, mutual benefit associations, and trusts for charitable uses. IC issues licenses to insurance agents, general agents, resident agents, underwriters, brokers, adjusters, and actuaries. It has also the ability to suspend or revoke such licenses. The functions of IC are as follows. 1. Promulgation and implementation of policies, rules, and regulations governing the operations of entities engaged in insurance, pre-need, and HMO activities as well as benevolent features. 2. Licensing of insurance, reinsurance companies, its intermediaries, mutual benefit associations, trusts for charitable uses, pre-need companies, pre-need intermediaries, and HMO companies. 3. Conducting insurance agents' examinations, as well as processing of reinsurance treaties and request for investments of its companies. 4. Examination/verification of the financial condition and methods of doing business of entities engaged in insurance business, pre-need, mutual benefit associations, trusts for charitable uses, and HMO companies. 5. Evaluation and preparation of statistical reports, studies, researches, annual reports, and position papers relative to insurance, pre-need matters, and HMO matters. 6. Review of premium rates imposed by life and non-life companies, mutual benefit associations, statistical reports of adjusters to determine compliance with established standards. 7. Adjudication of claims and complaints involving loss, damage, or liability incurred by an insurer under any kind of policy or contract of insurance or suretyship. 8. Review and approval of all life and non-life policies, pre-need, and HMO plans before sale to prospective clients. Philippine Securities and Exchange Commission, SEC. SEC is the national government regulatory agency to administer oversight on the corporate sector, capital market participants and securities and investment instrument and promote corporate governance over these. It was created on October 26, 1936 under the Commonwealth Act No. 83. Republic Act 8799 or the Securities Regulation Code widens the responsibility and scope of the SEC to include the following. 1. Have jurisdiction and supervision over all corporations, partnerships or associations who are the grantees of primary franchises and/or a license or permit issued by the government. 2. Formulate policies and recommendations on issues concerning the securities market, advise Congress, government agencies on all aspects of the securities market and propose legislation and amendments thereto. 3. Approve, reject, suspend, revoke or require amendments to registration statements, and registration and licensing applications. 4. Regulate, investigate or supervise activities of persons to ensure compliance. 5. Supervise, monitor, suspend or take over the activities of exchanges, clearing agencies and other self-regulatory organizations. 6. Impose sanctions for the violation of laws and the rules, regulations, and orders issued pursuant thereto. 7. prepare, approve, amend or repeal rules, regulations and orders, and issue opinions and provide guidance on and supervise compliance with such rules, regulations, and orders. 8. Enlist the aid and support of and/or deputize any and all enforcement agencies of the government, civil or military, as well as any private institution, corporation, firm, association or person in the implementation of its powers and functions under this code. 9. Issue cease and desist orders to prevent fraud or injury to the investing public. 10. Punish for contempt of the SEC, both direct and indirect, in accord with the pertinent provisions of and penalties prescribed by the rules of court. 11. Compel the officers of any registered corporation or association to call meetings of stockholders or members thereof under its supervision. 12. Issue subpoena duces tecum and summon witnesses to appear in any proceedings of the Commission and in appropriate case, order the examination, search and seizure of all documents, papers, files and records, tax returns, and books of accounts of any entity or person under investigation as may be necessary for the proper disposition of the cases before it, subject to the provisions of existing laws. 13. Suspend, or revoke, after proper notice and hearing the franchise or certificate of registration of corporations, partnerships or associations, upon any of the grounds provided by law, and 14. Exercise such other powers as may be provided by law as well as those which may be implied from, or which are necessary or incidental to the carrying the express powers granted the SEC to achieve the objectives and purposes of these laws. Board of Investments, BOI. BOI is the lead agency to promote investment in country and thereby generate local and foreign investment in the country. It is an attached agency of the Department of Trade and Industry. The agency provides advisory, actualization, and post services to the investors. BOI provides the following services to encourage new investments. Provide information for the knowledge-based research. Incentivize the investors through the provision of tax holidays, tax and duty exemption of imported capital equipment, etc. Participate through policy advocacy initiatives to ensure that the laws and regulations are investment-friendly. Money supply and payment system. The financial system is an interrelated financial process, which is fueled by money. Money supply is the availability of financial resources for deployment in the financial system. It is making the money available for use or for trade or investment. This is, of course, balanced with the monetary demand of the market. This balance is managed by the central bank. For the case of the Philippines, it is the Bangko Sentral ng Pilipinas. Money will take the form of the following: cash, coins, and bills. Demand deposits. Financial instruments. Money is expected to be regulated somehow to enable the sovereign to have control to its economy. As mentioned in the earlier chapters, money is an essential factor in the financial system. In order to do this, monetary policies must be enforced with the objective of promoting sustainable output and employment, peak and stabilize prices. For a monetary policy to be appropriate or effective, the BSP must ensure the following are present: alignment to the target goals, access to information, responsiveness of the variable set, regulation of circulation of notes. The central bank, BSP for the case of the Philippines, is authorized by the Republic under RA 7653 that they have the sole power to issue currency within the territory of the Philippines. Given it is a sole authority, no one is allowed to issue or reproduce any document object for general monetary circulation. Violators will be facing with imprisonment of no less than 5 years, but not more than 10 years. Greater penalty may be imposed depending on the gravity pursuant to the revised Penal Code of the Philippines. In foreign countries, different manner of regulation was imposed. According to Chapter 4 of the BSP Circular No. 829 Series 2014 amending the Consolidated Rules and Regulations on Currency Notes and Coins issued in the Philippines, for the banks, including their branches, if applicable, must observe the following for the deposit of their notes. Banks shall classify their deposits and sorted by series and by denomination. They should classify it according to 1. Clean or fit notes. 2. Dirty or unfit notes. Banks shall provide securely sealed bags or containers separately for the clear or fit notes, and for the dirty or unfit notes accompanied by a deposit slip for type/category. It must be labeled unfit. Handling of deposits. Banks' deposits shall be packed in sealed bags or containers in standard quantity of 20 full bundles per denomination. Each bundle containing 1,000 notes in 10 equal straps. Each strap can 100 notes. Banks located in the provinces may make direct deposits of currency notes, duly identified and sorted, with the nearest BSP regional office/branch. For those without regional offices available, they may arrange it with their respective head offices to be shipped to BSP in Quezon City. The cost shall be borne by the bank concerned. Banks shall incorporate measures on the implementation thereof in their compliance program. For the deposit of their coins, the following were observed. Coins shall be free from adhesive tapes. Coins shall be sorted into fit, unfit or mutilated per denomination and per series. Each bag of coins shall contain the prescribed standard number of pieces and amount per denomination. For example, for denomination of PHP 10.00, it should be maximum of 1,200 pieces only per bag, hence a maximum value per bag of PHP 12,000 only. Another example, denomination of PHP 1.00, it should be maximum of 2,000 pieces only per bag, hence a maximum value per bag of PHP 2,000 only. Notes and coins that are unfit for circulation. A currency note shall be considered unfit for circulation when it contains heavy crinkles, which break the fiber of the paper and indicate that disintegration of the note has begun, or it is badly soiled/contaminated and/or with writings even if it is price or sizing, or it presents a limp or rag-like appearance and/or it cannot sustain its upright position when held at the mid-portion of one of the shorter borders. For currency coin shall be considered unfit for circulation when it is bent or twisted out of shape or defaced or show signs of corrosion, but its genuineness and denomination can still be readily and clearly determined/identified, or it has been considerably reduced in weight by natural abrasions/wear and tear. For guidance, these currencies which are no longer allowed to be used for circulation as mentioned above, but may be presented for exchange to or deposited with any bank. However, BSP may opt to not accept these currencies for the following reasons. The notes and coins can no longer be identified, or the coins have indications of filing, clipping or perforation, or notes which have lost more than 2/5 of their surface or all of the signatures inscribed thereon. Notes which are split edgewise, resulting in the loss of the whole of or part of either the face or back portion of the banknote paper, or notes where the embedded security thread or wood security thread placed thereon is completely lost except when the damage appears to be caused by wear and tear, accidental burning, action of water or chemical or bites of insects, etc. Purchasing power. The purchasing power is practically based on the Consumer Price Index. In economics, the Consumer Price Index, or CPI, is the weighted average value of the basket of prices of all commodities representing the market. The commodity group in the Consumer Price Index are food and non-alcoholic beverages, alcoholic beverages and tobacco, clothing and footwear, housing, utilities and other fuels, furnishings and maintenance costs, health, transport, communication, recreation and culture, education, restaurant and miscellaneous. The degree of movement of the CPI from a period to another is called the inflation rate. Inflation is derived/shown in the equation in this slide. To illustrate, the CPI for years 1 and 2 are as follows. Year 1 is equal to 112, year 2 is equal to 116. The inflation is computed as follows. This means that the prices went up 3.57%. In terms of the purchasing power, this signifies that P1.00 can buy lesser than the previous year, to about 3.57%. Inflation is an indication of the market risk. Hence, this also affects the ability of the people to make new purchases or settle their option. In finance, inflation is a driver of the financing costs. For regulatory purposes, BSP finds its way to control inflation and enable continuous flow of funds in the market. Thus, BSP is one of the credible agencies that targets the inflation. Philippine Statistics Authority, for the case of the Philippines, is the body that determines the current inflation based on the current movement of the commodities set as index in the market. There are two types of inflation, the core inflation and headline inflation. Per the BSP, core inflation is used for most of the economic estimates where it excludes in the equation the movement of commodities or incidents with very volatile movement or outliers. Headline inflation, on the other hand, captures the changes of the cost of living based on the movement of the basket of commodities as a whole. In figure presented, you may note the trajectory of the headline and core inflation for the years 2013 to 2018. You may observe that the relationship of the headline to core is not consistent over the years, where the headline is not always higher than the core inflation. This is because the excluded incident or commodity may overstate or understate the basket of prices, but that effect will not last for long term. It is important in those engaging in financial markets to know which movement should be considered for their long-term decision. For those in the capital market, for example, this is a good input whether to buy, sell, or hold their securities. Payment system. The business is not a business if without any trade or exchange. In civil law of the Philippines, there are different ways to settle an obligation after the delivery of products or render of service. One of the modes of settlement is through payment of the products or services through a payment system. The system is a set of interrelated processes of settlement of goods or services rendered in exchange for a set of instruments that will undergo either a banking or non-banking procedures. Characteristics for an effective payment system. There is no ideal or best methodology to administer a payment system. The system is dependent on the best amenable, convenient, and acceptable solution for both parties, i.e. the payee and the payer. The payment system will work on a certain network or subsystems that will link the parties grounded by certain rules and procedures. According to BSP, a payment system normally requires the following: standard methods of transmitting payment messages with system, agreed means of settlement, common operating procedures and rules, e.g. admission, fees and operating hours. Importance of payment system. Payment system, as mentioned, is an essential facility to enable the complete course of the transaction. Based on the characteristics and features of payment system, BSP identified the following importance of the system, among others: safe and real-time transactions, effective risk management, which will manage credit, liquidity, default, technological risk, and legal risk, and lastly, facilitates financial market transactions, such as facilitate opening an account, facilitate purchase or sale of the transactions, and reduce human intervention, provides objective approach to manage financial market transactions. That is all for this episode. Let's summarize. Financial regulations set rules and standards to oversight the ability of the companies to establish and maintain appropriate level of capital to sustain the operation. Drivers in the market that led to failure for businesses: competitiveness, market behavior, consistency, and stability. Bangko Sentral ng Pilipinas is the top financial regulator in the Philippines. Together with it are the Philippine Securities and Exchange Commission, Insurance Commission, and Board of Investments. Money is the basic form of the financial system. Money supply is the availability of financial resources for deployment in the system. Purchasing power is based on the Consumer Price Index. Payment system is a set of interrelated processes of settlement of goods or rendering of service in exchange for instruments that will undergo either a banking or non-banking procedures. Characteristics for an effective payment system is that it should have 1. Standard methods of transmitting payment message, 2. Agreed means of settlement, 3. Common operating procedures and rules. Thank you for watching.